In the last tutorial I published in my YouTube channel, I talked about dollar cost averaging fundamentally. So if you haven't watched that video, I will drop the link to that video in the description below. It will be the first link in the description. So make sure you watch it. Now, in today's video, I'm going to be talking about something interesting, though it still lies within dollar cost averaging. All right, so make sure you watch this video to the end. And if your intention is not to watch this video to the end, please, there is no need for you to proceed any further. All right, but if you intend to watch it to the end and learn what I am about to talk or to teach, then make sure you watch to the end. All right, are you ready for this, guys? All right, let's go. Hello everyone, welcome back to my channel. If you're an existing subscriber, I want to say welcome. You guys are the real MVPs. And if you are just coming across my channel for the first time, I want to also say to you welcome. All right, so please make sure you watch this video to the end and ensure to subscribe to the channel. All right, now in today's tutorial I want to talk about how to place multiple entries in your futures trade, specifically on Binance. All right, so I'm going to be using this signal here as a case of study. So we have a signal that says short LTC USDT, you use 20 years leverage. Enterprise 1 is 86.43. Enterprise 2 is 86.53. Enterprise 3 is blah blah blah. Price 4, it continues, okay? Yeah. But I will just do only 2 then. The rest, if let's assume the signal you have or the one you were given or the one you got as a result of your analysis have up to enterprise 3, you can as well apply it using the same method I will use for the 1 and 2. All right. So how do you place multiple entries in your futures trade? All right. So our first signal said, now before I proceed, please, this interface you are seeing here is a screenshot. Okay, it was when I was running the live trade that I took the screenshot. Okay, just to show us how to enter multiple entries. All right, now it's already a live trade as at when I took the screenshot. Okay, and the enterprise, which is the first enterprise in that signal I showed us before now, is 86.43. all right, so I entered it the normal way you do enter your entries. Okay, I entered it and the trade is already running. Do you understand? Now I want you to observe something here. I want to observe that the margin I used is 1, which is the capital. All right, then the size of for this first entry, the size of LTC for this first entry is 0.678. 0.678. Okay, now the liquidation price is 90.28. I don't know if you can see it. Let me repeat, please. The entry price for this first entry is 86.43. Okay, then the size of LTC for this first entry is 0. The size for this first entry is 0.678. That's the size of LTC for this first entry, 0.678. Then the margin is 2.91, which is a capital, right? Then the liquidation price is 90.28. 90.28. All right. Now, take note of all of these figures I just mentioned. All right. So I have placed the first entry. Now, while the trade is already running, I will place the second entry, price, which is what? 86.53. Remember, we are taking a short position. All right. So the second entry price is 86.53. So I will go back and place it. All right. So over here, I have placed the trade already. Okay. Remember, I said it's a screenshot I took during the live trade. I didn't record the live trade, just a screenshot I took while the live trade was ongoing. So I have placed the second entry just the same way I placed the first entry. So the same way you normally place entries, okay, the entry price for your trading is the same way you place the second one. So why the first entry is already running, place the second entry also by imputing the price, the entry price, in this case being 86.53. Do you understand? So you place it, it will be under open orders, pending when it gets filled. Okay, so as at that point, the market price as at that point was 86.39, as you can see here. Okay, 86.39, and the price which I am looking for it to get filled is what? 86.53. Do you understand? Yeah, so that's it. That's why it wasn't filled immediately. It came under open order. Do you understand now? So let's make progress. It got to a point where it was filled. Let me show you. So at this point, it was already filled. It has gotten filled because if you look at the open order here, the open order tab, you'll see that there's nothing here. There is nothing here. All right. So it has already been filled. Unlike in the initial screenshot where it hasn't been filled and it was showing the trade. Okay. So how do you know it has already been filled? You take a look at the size of LTC again. All right. Take a look at the enterprise. Okay, take a look at liquidation price and take a look at the margin. Do you understand? So you take a look at the size of LTC, take a look at your margin, take a look at your enterprise, take a look at your liquidation price. All of these four that I just mentioned have changed. Immediately it gets filled, your second enterprise gets filled. The whole four figures I just mentioned will be changed. Do you understand? And we took a short position. We said short LTC USDT, okay, using 20 years leverage. Now, you may ask, the entry price for the second entry was 86.53. How come you are seeing something like 86.47? How come you are seeing 86.47 instead of the real second entry price, which is 86.53? Now, what happened there is the initial entry price, which is the enterprise one, and the latter enterprise, which is enterprise 2, being 86.53, both of them were collapsed together, all right, and divided by 2. So an average of the first enterprise and the second enterprise was taken as the new enterprise, okay, or the existing enterprise, which you can see here as 86.47. Let me show you what I'm talking about. All right, the first enterprise was 86.43, okay, which was filled, which was the first enterprise I entered, okay. Then the second enterprise, which was pending, it came under open order, awaiting when it gets filled, which was later filled, okay, was 86.53. All right. Now, I said you collapse two of them together. I mean, you collapse two of them together and you divide by 2, which is you take an average of the first enterprise and the second enterprise, you divide by 2. That will give you the existing enterprise, which you are seeing in the current trade. Do you understand? So we got, when we added two of them, the two enterprises, we got 172.96. All right, 172.96. So you divide the total by 2. Okay, so this is approximately 86.48. All right, but what is showing there is 86.47, which is almost the same. The difference is about 0.01. Okay, so that's how the new enterprise, which you are seeing in your live trade, or in this trade now, I'm using as case study, is showing, okay, which is 86.47. Now, furthermore, you may ask, how about the liquidation price? Because the liquidation price too has changed. I'm seeing 90.33. 90.33. How come? Okay, that might be your question. All right. Now, let's look at the liquidation price for the first entry price, because the second entry price has been filled in this case. So all entries has been filled successfully. So let's look at the first entry price before this second entry price. Let's look at the liquidation for the first entry price before this final liquidation price for all of the entries collapsed together. All right, guys. So the first entry price, which is 86.43, the liquidation price for that first entry price was 90.28. Now, look at the liquidation price for the second entry price, which was later filled. Okay, the new liquidation price is 90.33. The initial liquidation price was 90.28. So you can see there was an increment. Okay, it increased from 90.28 to 90.33. All right, so your liquidation price was pushed a little bit upward. Do you understand? So what it means is, when you enter the first entry price, okay, you were waiting for your second entry price to get filled because you have already entered it, but it hasn't been filled. So immediately it gets filled, your liquidation price will be increased. The reason behind it is because you took a short position. Okay, taking a short position means you are forecasting that the price will be going down. All right, so if the price will go down, it means if the price will go down, it means you will be in profit. Okay, and if it starts going up, it means you are in a loss. Right, now for you to be liquidated, it means it has to keep going up to a very certain price where you will finally be liquidated. Do you understand? It has to keep going up. I said up. All right, so your liquidation price initially was 90.28. Okay, so when the second entry price was filled, your liquidation price was increased to 90.33. So the tendency for you to be liquidated was a little bit pushed further forward. Do you understand? It was a little bit pushed forward. So let's assume you would have been liquidated at 90.28. Okay, let's say the market price got to 90.28, for example. And as at that, before it just got to 90.28, just before it got to it, your second entry price got filled. I'm just using this as an example. Okay, all things being equal, let's just assume. I know it's not possible, but let's just assume just before it got to your initial liquidation price, which was 90.28, your second entry price just got filled. Immediately that happens, you will no longer be liquidated at 90.28. Rather, your liquidation price now has been increased to 90.33. Can you see the advantage of having multiple entries? Do you understand now? Which is actually dollar cost averaging. Multiple entries means dollar cost averaging. Okay, it means dollar cost averaging. So your liquidation price will be pushed further. Okay, so that is why you are seeing 90.33 here, unlike the initial interface where we only had the first entry running, while the second entry was still pending, where the liquidation price was 90.28. I hope you understand the explanation now. All right, let's make progress. So the next thing you will observe is that your margin has changed. The margin has changed. Initially, your margin was 2.91. All right, and this 2.91 was the amount of capital or money that I used to open the first entry. All right, so it increased to 5.80 as at the successful filling in of the second entry price. Can you see? So it means my first margin for the first entry price was added together to the second margin for the second entry price after the second entry price was filled. Okay, so you add the initial capital for the first entry price plus the initial capital for the second entry price. When you add them together, you will get the new margin or the new capital. All right, the new trading capital, which is 5.80. Do you understand? Now, the next thing you will observe is that the size of LTC increased. The size of LTC increased to 1.349. All right. So what happened here was the initial size of LTC as at entry price 1 was added to the new size of LTC as at the moment the second entry price was filled. to generate the new size of LTC, which is 1.349. Do you understand? Because if you observe here, this is the first entry price, okay? The first entry price before I placed the second entry price. This was the first entry price when it was still running. If you observe here, the size of LTC here was 0.678. Then when the second entry price was filled, the size of LTC increased from 0.678 to 1.349, meaning the size of LTC that was pending in the second entry price was added to the size of LTC in the already running entry price of one, okay, of the initial one, okay, to generate the new size of LTC, which we are seeing in this current trade. Do you understand? So LTC price in enterprise 1 plus LTC price in enterprise 2, when enterprise 2 was filled successfully, generated the new size of LTC, which we are seeing in the current trade. Do you understand? So everything will be added together when the next enterprise gets filled. Okay? As soon as the next enterprise gets filled, everything will be added together. What will be added together are your margin will be added together. Okay, not average. The average won't be taken. It will be added together. The size of the asset you are trading will be added together. The average won't be taken. Okay, then your liquidation price will be increased if it is in a short position, like in this trade now. Liquidation price will be increased. Then your entry price will be averaged, meaning the initial entry price plus the second entry price will be added together, divided by 2 to generate the new enterprise. Do you understand? So all of this is to your advantage. All of this is to your advantage. So these are the this shows you the concept of dollar cost averaging being played out. Okay, these are the concept of dollar cost averaging is being played out. How? By having multiple entry prices. Multiple entry prices. Okay, so in this case now, you know, the initial entry price was 86.43. Okay, and remember we are taking a short position. So 86.43 was the initial entry price. So we waited when the price of LTC increased, because we are in a short position. When it increased to 86.53, our second entry price got filled. Do you understand? So we are maximizing the increase in price of LTC so as to maximize our profit ultimately. Do you understand? Because we took a short position. But in a long position, the reverse is the case. So I hope this content was useful to you. I hope this content was an eye-opener to you. I hope this content unveiled another concept to you as regards trading the futures market, specifically in your Binance Futures. All right. So if it did, all you need to do for me now is to subscribe to the channel. This is one way you support us, and this is one way you encourage us. Kindly subscribe to the channel and make sure to like this video. Like the video is very important. Okay, you encourage us by doing all of these things. All right, guys. So look forward to the next tutorial on where I will talk about taking multiple enterprises in a long position, because this very content was centered on short position. So the long position tutorial will come next. All right, so look forward to it. And for you not to miss out on that very forthcoming content, you need to subscribe to the channel so as to be notified as soon as I release the next tutorial. Okay, so guys, that will be all for now. Cheers guys, and we'll meet again in the next video.